Kevin Green, senior markets correspondent, to help set up the action today. KG, President Trump set to have this call with China's President Xi Jinping this morning. It's set to happen at the top of the next hour, 9 a.m. Eastern time. What's the expectation going into this?
Well, the market is expecting that President Trump and Xi will be really trying to finalize, or at least 80% of the way there, finalize this TikTok deal that has been obviously in the focus and in the news headlines over the last week or so. Let's see if that actually does come to fruition. It's kind of interesting to see the development in that whole process. It's basically franchising TikTok to the U.S. as its own separate entity. So maybe not so much the desire of the United States a year ago, what they wanted to see, but it is a compromise at this point. They'll probably talk about that, obviously the trade deals and maybe trying to find some form of a resolution. Once again, when you're kind of looking at these trade deals, though, it's really focused on the metals space, the rare earth minerals, things of that nature, as well as tech. But China has been kind of, signaling to their companies that they want to diversify themselves away from U.S. technology. And if that's actually a hardline stance, that also may be an area where we kind of lose a little bit of leverage. So let's see how that actually is going to develop in itself. And I think a very small portion of what happened yesterday between the press conference with President Trump and the UK Prime Minister, if you will, making the comment around Afghanistan and the Bagram Air Force, the Bagram Air Base in Afghanistan is actually kind of a big deal. He did actually mention China and saying that he wants to get back to that air base in order to kind of monitor China's missile systems and things of that nature. I was actually taken back by that. Let's see if that actually comes up on the call, because that was actually a little bit odd for that to be mentioned. And maybe that's once again the art of the deal from President Trump, and maybe leveraging some of the geopolitical space in order to try to gain an edge when it comes to the trade deal. So a lot on the calendar when you're looking at the economic data for next week, but for today, nothing on the economic calendar. Really, it's going to be all about geopolitics and trade deals.
Okay, let's talk a little bit about FedEx. Shares higher in the pre-market, beat expectations. We know the bar was lowered. A lot of that, though, was cost cutting, so you can only cut costs for so long, or a portion, I should say, of that was cost cutting. What's some of your takeaways here?
Yeah, we are seeing the shares up about 2.5% in pre-market trading. They did beat both on the top and bottom line. Adjusted earnings per share came in at $3.83. Street was looking for $3.59, and revenue came in at $22.24 billion. Street was looking for around $21.6 billion. And as you kind of talked about, it's a lot of cost cutting. They're going to be spinning off they're going to be spinning off the FedEx freight segment by 2026, June of 2026. So that's actually a very big deal. They've already kind of cut the fat when it comes to the air operations as well. And they did actually increase their guidance, or beat the street's expectations when it comes to revenue guidance for fiscal year 2026. They're actually expecting revenue growth between 4 to 6%. She was looking for only growth of around 1.2%. Is this cost cutting that actually increased the margins? That's one portion of the story here. They did actually see an uptick in U.S. domestic volume. And so that's actually a tailwind for them. They do have some headwinds when it comes to this de minimis exemption that's going to be going away here, but they have offset that by raising prices on freight just in general here. So they have been able to manage this. You are seeing a little bit of selling in pre-market. Once again, low bar, but it seems like they are trying to turn the ship around. It's just a little bit slower than probably what the street had expected over the last year and a half, but it's in the right direction, at least for now.
Okay, and now I want to get your targets on the S&P 500. I know today could have some effect by triple witching. 66.31 where we landed yesterday. Where do we go from here, potentially to the upside and the downside, KG?
Yeah, to the upside, looking at 66.75. To the downside, 6,600. And if we break through 65.90, Diane, it probably will be an ugly day. There has been some bearish options trades that were placed around 30 minutes into the close. Not out of the norm when you're looking at options expiration, but September usually is the quarterly expiration that does create some volatility. I'm looking for some fireworks here today, and particularly to the downside as the day goes on.
All right, thank you, KG. That's our Kevin Green, senior markets correspondent. I appreciate it.